people at the top, know the game. They understand what's coming. They understand how to play it, and they can make inflation work for them. I mean, they actually can get, inflation. The working person, the average citizen has trouble with inflation. Their salary is fixed, and things cost more. Their lifestyle gets worse. People at the top, they can actually root for inflation because they can borrow cheap, and the inflation pushes up the value of their assets. And that's why the wealth inequality is as it is. I mean, that's the whole quintillion effect. So,
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Lawrence Lepard dives deep into the complexities of inflation, wealth inequality, and the broken monetary system that affects everyday Americans.
And, there are people who believe in the state, believe in the federal government, believe in, fiat money and benefit from that system. And that's fine. They're entitled to do that. But, the outcomes that they're producing aren't very good, are they? For most people. And
No.
Yeah, in fact, they're quite bad. If you dig down a little bit below the level of those of us who are doing okay, my sister lives in a rural community in Utah. She tells me some stories that are just heartbreaking in terms of how hard it is for the average person. So, that to me means that, it's incumbent upon those of us who are aware to try and push for a better world, a better system, fairer system, and then to help those that we know and care about, in terms of telling the story of Bitcoin and telling why, helping them to protect themselves. I mean, I have stories of investors that I've orange pilled who, are now very thankful that, they bought it at 10,000 when I was pounding the table. You know what I mean? And that's satisfying. And by the way, that's not over yet. I mean, it's, when it's $1 million, people are going to say, holy crap, you were buying it at 100,000? Oh my God, you have a whole coin? Oh my God, nobody I know has a whole coin. So right. I mean, it's all, I really do believe Saylor's right. It is going up forever, Laura. So
Absolutely.
So, well, you just kind of got to get in there. I mean, I was counseling one of my investors the other day. It's like, well, I put an X amount in, it's a big number. He said, maybe I'd hold the rest back until it goes down. I said, I wouldn't do that. I would just buy it, because you may not go back down. And if you're tied, unless you need it in the next 6 months or year, or even, or 2 years, really, it'll be higher in 10 years. So just buy it,
Yeah.
That's kind of how I see it. If you're a Fed economist, you get paid, by the Fed, you get big consulting contracts and gigs, you're part of quote unquote the system. And you get rich appointments afterwards. You can, you sit on board seats, et cetera, et cetera. I mean, Larry Summers, who was the president of Harvard University as an economics professor there, he made $20 million in consulting fees, consulting to Wall Street, when he was Secretary of the Treasury. I mean, before he was after he was Secretary of the Treasury. So, I mean, the point is that there's a kind of a system of bribes and corruption. I mean, how do these people go to Congress making $200,000 a year and end up worth millions? I mean, it's because they get things from other parties that are self-interested and that pay them to bend the policies and the rules in their favor. And so, the Fed has just totally dominated the economics discussion, and they've tried to make anyone. I mean, the Austrian model perfectly explains and predicts what's happened to our economy since the founding of this country.
BlackRock's Bitcoin exchange-traded fund saw its largest ever single-day outflow as Bitcoin funds notched a fourth straight trading day of outflows, totaling more than $1.5 billion. BlackRock's iShares Bitcoin Trust ETF hit $188.7 million in outflows on December 24, surpassing its previous record of $72.7 million set on December 20, per CoinGlass data. All 12 United States-based spot Bitcoin ETFs saw joint total outflows hit $338.4 million on Christmas Eve. Since December 19, the funds have seen joint net outflows of $1.52 billion. The Fidelity Wise Origin Bitcoin Fund and the ARK 21 shares Bitcoin ETF also saw respective December 24 outflows of $83.2 million and $75 million, while the Bitwise Bitcoin ETF was the only one to see an inflow, which hit $8.5 million. Meanwhile, Ethereum ETF experienced 2 consecutive days of inflows in the lead-up to Christmas. Yet a spot Ethereum ETF continued their momentum with a second day of inflows on December 24, adding $53.6 million after a $130.8 million inflow on December 23. Launched in July, the Ethereum funds had a slow start compared to the strong early momentum that spot Bitcoin ETF saw after their January launch. However, since late November, the Ethereum ETF have gained traction, having seen an 18-day inflow streak that was broken on December 18. Bitcoin was trading at $98,035, up 4.59% in the last 24 hours, while Ethereum was trading at $3,420, up 3.28% over the same time, according to CoinMarketCap data at the time of writing. TradingView shows Ethereum's relative strength to Bitcoin. The Ethereum ratio is currently at 0.035. Some analysts say that Ethereum may outperform Bitcoin in January 2025. Meanwhile, net assets in U.S. Bitcoin ETFs surpassed gold funds for the first time on December 16, according to K33 Research. On December 16, the U.S. Bitcoin funds collectively broke $129 billion in assets under management, surpassing U.S. gold ETF, which held just shy of that figure, according to K33 Research's head of research, Betta Lund. The AUM figure includes spot BTC ETF as well as ETF that track Bitcoin's performance using financial derivatives, such as futures, said Bloomberg ETF analyst Eric Balkunas.
And the book takes you through that if you're willing to wade through. There are 2 chapters that some people have told me they're kind of the rough sledding because I really dig into the history. I started in 1789. I take you through all the financial developments up to the present day. And if you look at it, you know, the Austrian model could have predicted it and explains all of it. And the Keynesian model is wrong and doesn't predict any of it. It doesn't explain all of it or any of it. And it's almost laughable how bad they are. And I've got tons and tons of examples in the book. And yet they continue in power. And the reason they do is because the government supports them, because that Keynesian model allows the government to overspend and have the goodies to hand out, so that when you go in as a representative making a couple $100,000 a year, you end up worth millions. And so it's just a big corrupt. It's like we're dealing with the mob, except it's called the government. and you know what? We don't have to put up with it. We just don't have to put up with it. But we can't be stupid about this because, the mob promises certain people certain things, and that buys a vote, and the vote might be, it's amazing how little people can get bought off with, right? I mean, okay, send me a $2,000 stimmy check and I'll vote for you. Meanwhile, out the back door, they're robbing you, many, many times that $2,000 in terms of inflation and other stuff. And yet you'll be bought off by that check. It's ridiculous, right?
Bitcoin reserves on Binance, the world's largest crypto exchange by trading volume, had dropped to levels not seen since January 2024, just 2 months before Bitcoin's price skyrocketed 90% in March. If Bitcoin follows the same pattern with its current price of $98,680, it would mean a $187,500 price in a matter of months. Binance's Bitcoin reserves recently dipped below 570,000 BTC, the lowest level since January, according to CryptoQuant contributor Darkpost, in a December 25 analyst note. When exchange reserves decline, this typically signals that investors are moving Bitcoin into cold storage and are bullish about its long-term price prospects. Binance's reserves dropped to a similar level in January, and 2 months later, on March 13, Bitcoin surged to $73,679, marking an all-time high. When periods of withdrawals occur, it is often a sign of positive momentum building in the market, Darkpost said. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.